Back with closing trades right here on ET now, and a sudden respite or a move up actually on the Nifty Bank is what you can see, and I guess that's what's rubbing off on the Nifty, which is making another attempt to claw back into the green. That spike up is duly all thanks to banks. SBI, of course, is the one which is leading the pack today with a solid 1.25% move. You've also got an Axis which is holding out well, very, very smartly. And HDFC Bank as well has now finally turned the round, or rather turned the tide. It's managing to pick up a little bit in trade, and it's now holding out in the green at least, or move to the green side. So that's what I'm seeing in terms of the large caps. But amidst the mid caps, Kunal, what's the trend that you're seeing on banks? Or do you think it's largely the blue chips which are leading the pack right now?
Yeah, it was actually at 3 o'clock, strike of 3 o'clock, where we've seen the markets showing that spike. And started off with banks, and specifically, I think we saw the move coming back into SBI, where the stock made a high and then trickled to the other large cap names. The last I saw, you saw respite coming back into names like L&T, Hindustan Unilever, Bajaj Finance, Finserv, etc. So it's spread across, widespread across large cap names. I'm sensing this could be some sort of basket buying which could be happening, at least from a technicality point of view. But yeah, I think this brings the markets back again to the fray of trying to come back and conquer that 26,000 mark.
Okay. Yes. So you've got the Nifty spiking now. We're up around 0.1% thereabouts. I wonder what's happening in broader markets, and within that basket as well, you're seeing decentish upticks. Okay, so nothing much on the mid cap, frankly, but the small cap also continues to hold in fine fettle. So no big moves on either the mid cap or the small cap, at least nowhere close to the move in the large cap. But the Nifty PSU Bank is up 1%. So that one has made a very, very smart move. And the Nifty India Defense Index is up 1.25%. So you're seeing a few percentage points being gained on both of those. A few bips rather being gained on both of those, and that is visible. The Nifty FMCG index also seeing a spike. If you can pull that one up, 0.5% higher now on the Nifty FMCG index. Radico Khaitan and Marico are the two ones which are gaining over 2% each in trade. Okay, but Nitin Raheja, Executive Director, Head Discretionary Equities at Julius Baer, joining us at this hour. Great speaking with you, Nitin. Let me first start off by having your take. We're very close to life highs where the Nifty is concerned. Earnings are now pretty much through. Give us a sense on what H2 holds in terms of positive surprise, because that is what will determine the direction from here on. What's your sense?
We started this earnings seasons in a very muted manner. Most analyst expectations were that this would not be a great earnings season. But the markets actually, with the collective wisdom, actually started this earnings season towards the higher end of their trading band, and more closer to all-time highs, if you remember. And it's sort of been validated and borne out, because if you see the earnings season, this has been, I would say, a pleasant surprise. The earnings have been better than what analysts expected. And now, as we sort of head into the third quarter and the fourth quarter, the impact of those GST cuts that were seen, and what anecdotally people talked about, festival-led demand, should all manifest itself in the third quarter. So I think I'm pretty positive on the markets, although it might yet take some time to sort of make a significant break. We might break and test our 52-week highs, but to significantly break out, we yet need earnings momentum to start showing up. Having said that, I believe that if you go by the expectations for next year, the consensus view is that we should see at least a 14-15% earnings growth. And if that is to play out, I would believe that I won't be surprised if we test or go into new highs within the next 6 months.
Interesting. That's the take coming in on the overall market sentiment right now. Just looking at banks and the way they are holding out, of course, SBI is the one which is leading the chart. Like we pointed out, you've got HDFC Bank turning the tide right now as we speak. You've got Axis Bank, which is holding up also 1% in trade. Let's see how the entire banking piece plays out. That, because of his weightage on the index, is bound to actually resurrect and lift up the overall markets as well. And Kotak also has flattened out from where it started off in trade. But Jubilant Foodworks, that's the big star today after its numbers and especially the same-store sales growth that the markets liked. Kanishka is here with highlights from the earnings. Kanishka?
That's right. So Jubilant Foodworks, like you said, is in focus. After an inline set of numbers that the company has reported, its standalone revenue and EBITDA, they saw a growth of about 15.8% on a year-on-year basis, whereas the net profit, that jumped about 23%. Margin stayed steady at the 19.4% level. And the company did see continued expansion with its stores. They now are at 3,480 stores. This includes 81 Domino's outlets, which are now spread across 500 cities. India LFL growth, that was at 9.1%, led by delivery LFL of 16.5%, while the orders, they saw a growth of about 24%. International markets also performed well, especially Sri Lanka saw a growth of 86%, Bangladesh a growth of 54% over there. On the con call, the company did guide for a strong H2. It plans to open 900 stores in 3 years, aims for 5 to 7% steady state LFL, and sees 200 basis points of margin improvement over a period of 3 years. But brokerages, they remain split after the result, which has been in line. Jefferies has a target price of 1,000 rupees, Bernstein 820 rupees, Morgan Stanley 775 rupees, whereas Citi, that has maintained a price of 800 rupees with positive views citing expansion-led growth and strong delivery momentum. On the flip side, ICICI Securities, that has cut the target price to 700 rupees, and JP Morgan, that has also lowered the target price to 650 rupees, citing valuation concerns and softening LFL growth. So yes, a mixed view as far as the brokerages are concerned, but overall an inline set of numbers is what we saw for Jubilant Foodworks.
Yes, that we did. And Nitin, finally coming out of a slumber, the entire QSR space with some added cheer after the GST rationalization. Is this a piece or a sector that you're looking at?
I think it's pretty interesting because the sector has actually done nothing for the last couple of years. From, the initial euphoric listings and the expectations of growth, the sector has done nothing. So in that sense, if you have to take a little bit of a contrary call, I think the sector has consolidated. The GST cuts have helped. And if consumption were to get spurred, more so with food inflation being so low, that's the other advantage that the pack is working with. I would not be surprised if we do see a sort of a cyclical revival that take place in the sector.
Okay, and Nitin, give us a perspective. How would you play consumption as a theme? As a larger theme, what are the sub buckets in which you'd play consumption?
Well, consumption, I would play it through the premium end of the consumption, which is in my view an all-weather story and pretty resilient through cycles. And that would mean whether we are talking of premium automobiles, premium garments. We are talking of travel and tourism, these, and lifestyle-oriented products. I think these are all themes which have shown a tremendous amount of resilience through market cycles. Adding on to that, of course, aviation also comes as a part of that. But adding on to that, I think the revival in the bottom K of consumption bucket should also start showing signs of picking. And that would probably, encompass a far more wider reach from footwear to garments, and even, for example, entry-level two-wheelers and cars.
Right, absolutely. But Nitin, as a strategy, would you think that it's the premiumization play that you would want to play as opposed to maybe rural or the bottom-up stories?
The premiumization play, like I mentioned, is an all-weather play. It's sort of going to be it's going to hold the consumption bucket together through all, and that's a play which, if you ask me, while you might have small blips in terms of growth, but it's almost a linear play over the next few years. On the other side, the non-premium play, I think, is headed for a cyclical upturn, and at least that's the bet. And normally, and I've talked about this earlier, wherever the government puts its might behind something, like, for example, the government had put its might earlier behind infrastructure, and they upped infrastructure spending, and we saw a boom out there. Now, similar things happened with power. And now the government is putting all its might behind, reviving consumption, with domestic consumption being almost 58, 59% of our GDP, I think that should see that cyclical upturn take place. And I think that to me is the, the cherry on top of the premium consumption.
Nitin, anything that stood out for you in terms of earnings this time around? Commentary, earnings, which you were absolutely not anticipating? I've been asking this question to a couple of people, trying to get your perspective.
I think this was so there were two things that stood out. If you look at the broader commentary was quite positive across most sectors. So whether it was automobiles, we saw that, whether it was the internet e-commerce consumption basket space, we saw that happen. We saw the banking space come up with numbers which were better than expectations in terms of credit costs or stress in the system. On the other hand, what we also saw was, if you go to the other end of the spectrum, which is the small cap earnings, while at an aggregate level, when you look at it from an index perspective, it didn't really show great earnings. But when you look at individual bottom-up stock stories, and that was not related to any particular industry, we saw a lot of positive commentary coming from the small, or I would say even the micro cap space. And that was quite heartening, which basically tells you that the MSME sector is doing reasonably well.
Okay, that's that on the market segment right now. Eternal, let's talk about that, because that stock dipped below that 300 rupee price point. Now it's that struggle to stay put above 300. Kunal, I mean, is this a big directional change or a trend change that you're seeing, or was it just a one-off day? Because I think just a short while back you had a huge block deal also on Eternal.
Yeah, but I think 300 levels, Aisha, it's a good strategy to go for a contra buy on Eternal, because 5 consecutive weeks, the stock has gone through almost like a 20% correction. Somewhere down the line, I believe that the mean reversion could probably stop. I mean, could play out, and the sell-off could stop for the stock at current levels, at 300-ish odd mark. So I believe that it's a good territory, and that's what I think the prices are taking support today are indicative that there is a fresh lease of buying, which could probably have started to seep into the stock price, and that generally is a indication that selling gets arrested. The stock price say consolidates for a couple of weeks, and then gradually you may start to see the stock going into an uptrending mode. So price wise, I think it's a good time to try and go for maybe a contra buy or chip into the long positions for someone who has maybe at higher levels.
Okay, that's that on Eternal. 302 is where the stock is today. Nitin, you think that's a better strategy? Instead of what one consumes, how one consumes is what one should have in one's portfolio, and maybe consumer tech may be a great strategy. Cases in point being, your Nykas, Eternals, etc.
Well, consumer tech is coming of age. Okay, and we are seeing market leadership getting established out there. And it's my belief that after the initial euphoria, and after coming into looking at the demands that the market puts on these players, a lot of them are having a clear path to cash flows and profitability. The point in this is that this is generally a sector where the difference between number one and number two is huge, as such. And I think that is what presents an opportunity from time to time, even to get the number one, because sometimes you have a phase where the number two player gets a little more aggressive, wants to do a fundraise, and the number one sort of reacts to it, and we see a price correction. I think because this is a winner takes all market, most likely. So, but I think this is a very interesting space, and the business models that are starting to emerge are giving you much more confidence.
And Nitin, anything within cement that you're liking? It's not a sector that generally talk too much about, but Q2 is generally softer seasonally for cement. Could Q3 lead to a bit of a resurgence, given that we've seen a bit of a prolonged monsoon play out in Q2 and almost in fact into the start of Q3 as well?
Yeah, so I think we are positive on cement, and we have we own cement in our portfolios across, and our own belief is that the pricing has held remarkably well in a very tough period. And generally, the second half of the year is when you see a lot of spending happening towards infrastructure, towards construction. So I think cement should do well.
That's the take coming in on how to approach the cement play right now. But Nitin, what about that entire PSB craze that the market had about a month back? Of course, it was the valuation story which was on their side. But do you think PSBs versus private banks, does one really need to make that kind of a call, or do you think a basket approach may actually work better?
Basket approaches should work better, because it's not a question of, given how PSBs have come back and how the books have held, and the kind of valuations that they trade at, and more importantly, the recent conversation that has been going around. You had this whole PSB meet that happened in terms of the Manthan, as they called it. I think the government is also looking to see how they can create a few large banks, and that's been talked about, and also in that process create value. And normally, whenever the majority shareholder is trying to create value, we as minority shareholders also do it. So I think I am quite positive, and I would follow a basket approach.
All right. Nitin, the other pocket that in fact I was listening to Hero's commentary today, Hero Moto, and they were suggesting 8 to 10% growth within the two-wheeler industry as a whole, with Hero's growth obviously being faster than the industry. And a very interesting nugget came out. They said that there have been 3 instances in the past where excise duties have been cut, and a 5 to 8% duty cut has been passed on to consumers. For the 2 years thereafter, the industry has grown at double digit. Is this something that the street has underestimated, in your opinion, the two-wheeler industry? Because one, there's a GST rate cut, but along with it, you've seen tax cuts. You've seen plenty of incentives being doled out. So, and inflation at all-time lows. All that auguring well for something like a two-wheeler industry.
No, I think I agree with you. And, let's not forget that even before this rate cut, there was this conversation on the rural economy revival. That is, after a few great years of monsoons, the MSP price hikes that have taken place, the rural economy is expected to do well, and that would benefit the entry-level two-wheeler segment. And now, coupled to that, you also have the GST cuts. So I think there are a number of tailwinds that are backing this sector currently.
How would you play it, Nitin?
We would play it through the entry-level two-wheelers with a largely domestic focus.
So 100cc. How would you play auto, Kunal, from a technical perspective?
I think it's a good level to go for a buy on auto stocks, and especially at a point where Maruti, Eicher Motors, the leaders of in the last couple of months, I think these stocks have taken a pause. 5% to 7% broad correction for these auto stocks, and especially the ones which have been the leaders. I think purely in that sense, it's a very good level for contra traders to look at a buy, because eventually I think after say broadly a 10% odd correction from the previous swing highs, the trade looks very attractive for many of these stocks, and these stocks have confirmed breakouts after years of underperformance, consolidation, call what you may want to, for these names. So I think in that sense, I would probably be a lot more bullish on the entire auto pack, and it's a matter of time that when these stocks come back into recovery, you would see these stocks coming back into breakout of their previous lifetime highs or swing highs, as the case would be.
Nitin, the other thing that I wanted to talk about also was the entire capital market theme, right? Structural as it may be, it has had its sort of some accidents, if I can call them that, and there has been bouts of selling as well in that space, and valuation ease off too from time to time. Having said that, I was just looking at BSE's earnings performance for this quarter gone by. Do you think it's a conviction buy still? And again, do you be selective there now?
It's if you ask me, we're very positive on the entire space.
Sorry.
However, what concerns me is a little bit from a valuation perspective. So, I would be very, very specific when I'm looking at the entire space. But overall, like you said, it's a structural story. And I would, love to have corrections as an opportunity to buy in and take a little bit of an overweight stance out there. But current valuations, say for example, if you were to look at exchanges, or even if you were to look at some of the the intermediary space out there. I mean, within that, I yet feel the AMC space is a better bet today from a valuation perspective. But overall, like I said, across all different sectors within the space, we are very positive.